Yes, Chair, ready to start.
Thank you very much. Okay, lovely. All right then. All right, and welcome everyone to the Welsh Church Act meeting today, commencing at 4:30. Prior to the beginning of the meeting, I've got some housekeeping issues I want to express. So, may I remind everyone present that this is a hybrid meeting. It's being live streamed as well as recorded via the internet, and this recording archived for future viewing. If a participant wishes to speak, can they please raise their hand in person if sat in the chamber, or use the remote raise hand function located in the bottom left-hand side of the screen. They will put you in the speaker queue accordingly. When subsequently invited to address by myself, please then press your activation button. That's the red button, though it turns red, as you know, in the bottom center of your screen. Please be patient and aware that there will be a small time lag and that you do not need to press the button again, because that will depress it. The response to the system is not instant. If the button or desk microphone changes to red, then it has responded. If a participant raises their hand via the remote function and is not subsequently invited to address by myself, please do turn their camera on to indicate a place in the chat function to myself, which is under chat. When invited to address by myself, please all participants ensure their microphone and camera is on to ensure they can be seen and heard when actually participating. If this is not possible for any reason, please bring this attention to myself or the Democratic Services Officer, which in this case is Amy, and as soon as possible. Once you are participated, please remember to turn off your activation button off as to not delay other participants from coming onto screen and to avoid any background noise or feedback when other participants are speaking. Okay, that's the mute button, as you can see by the actual camera button. All right, and you need to depress it when actually you stop speaking. And also, could you make sure it's off at any other time, because I don't want to necessarily hear background noises. Please ensure that all debate is raised verbally and not via the chat function for the sake of the recording. The chat function may be used to highlight any technical issues and or to grab the attention of myself or the Democratic Service Officer. If any participant has difficulty hearing or being heard when they address the committee, they should let myself or Democratic Services Officer know. If a remote committee member has a prejudicial interest and is therefore required to withdraw from the meeting, the Democratic Officer will place the participant in the virtual waiting room until such time the interested item has been concluded. Please do not close your browser window whilst in the waiting room, as the Democratic Service Officer will bring you back into the meeting automatically when appropriate. If an electronic vote is called during the course of the meeting, then advice on how to participate will be given accordingly to committee members with voting rights at the time. Okay, so what I first of all like to do is go through the agenda now. I know we have a couple of guests, and I'm really welcome to Daisy and Antonia, okay, who I know will be introduced later on. So the first item on the agenda, do we have any apologies for absence?
It's just Councillor Morgan who's not with us this afternoon, Chair. I haven't received any apologies as of yet, so he may therefore join.
Thank you very much. And the second item on the agenda is, are you happy for me to sign the minutes of the extraordinary meeting held on the 6th of November 2023? Everyone's happy for me to sign?
Yes,
Councillor Drake? Yes. And Councillor Hamilton? Are you happy for you to sign as well? Happy to agree? Yes, I think so. Thank you very much. Okay. Now, number 3 is any declaration of interest. Do we have any? Councillor Hamilton, you got your hand. You got your raised hand function. Are you declaring interest, Councillor Hamilton? I haven't heard. Yes, you're taking yours off. That's fine. Okay. Thank you very much. No declaration of interest received. We're now going on to the presentation. Over to you, Gemma. Thank you. Do you want to introduce?
Hello, good afternoon. Good
Hello
afternoon. Hi. So members may recall that we took the decision quite some time ago to transfer the investments over from Evelyn Partners into a CCLA investment. That did take a little while to process, but we managed to get the account opened and start transferring funds across just before Christmas. And CCLA are here today to give us an update on the investments. And this is typically a kind of update that we would try to arrange for trustees at least annually. Okay, so I'll hand over to Antonia and Daisy. Thank you.
Okay then. Welcome, Antonia and Daisy. Over to you, Daisy and Antonia, when you're ready.
Oh, hello. Is Antonia able to join at the same time as me, or?
Yeah, should be able to.
Okay.
There's no reason why she shouldn't.
Okay, just so for now, just to introduce myself. My name is Daisy Manifold. I'm a client relationship manager at CCLA, and I pitched along with my colleague Antonia. I think it was back in January 2023, so it's just over a year since we met with you last, and we're really pleased that the funds have now come into under CCLA's management as at the end of December last year. I've actually been on maternity leave during that period, so I've actually just got back last week. So Antonia is going to take you through most of the presentation today, but I'll be here to chip in for any questions or anything like that. So over to you, Antonia.
Thank you very much, Daisy. Sorry for the slight delay. Technology is getting the better of me today. What I'm going to do is show my screen. So I'm going to do that now, which might take a second or so. Bear with us. I did watch the video earlier about how to do this, and I've clicked share screen and nothing is coming up.
That's okay, Antonia. That's okay. Just give us a second, because my colleague who's controlling the system, she would have seen your share screen request, so she just needs to activate that. It will change to waiting to source, as it's just done there, as if by magic. So if you could select the source you wish to share, Antonia, then I can confirm with you when that's come onto screen.
Bear with me. I don't have an option to share a PDF. Is that not an option?
It should allow you to share any source. Have you got it open on your screen?
Yes, I do.
So when you go onto the source, does it allow you to select entire screen?
Yeah, I've got other things open, so bear with me. I'm just going to try and see.
Okay.
There we go. I just needed to open it and kick it off again. There we go.
Okay,
right.
That's okay. Bear with us one moment. It's just come onto screen for us now. If my colleague Liz could please take the agenda band off the top of the screen, just so we've got the full image. That would be lovely, but we can see that now, Antonia.
That's great. Thank you. Thank you very much for your patience. This is a new system to us, so I'm a little bit slow, so apologies for the slight delay on this. So first of all, thanks, Daisy, for the introduction. And I think the best thing to really do is kind of start with a quick summary of your valuation, which I'm hoping you can see now as it kind of filters through to the screen. So this is as at the 26th of February, so yesterday, your valuation is 1.9 million. And the anticipated income for 2024 is £54,000. So that is, we paid over the quarters, so that will be coming through to you. As Gemma said, it's taken a bit of a while for us to open the accounts, but we put the kind of three key transactions that were made in November, December, and the most recent one, the small one that came across in early Feb. So a total of 1,869,000 came across to us. So already, despite, in that short space of time, we have seen a little bit of growth on your accounts. Although it's very early days, the performance since you put money in is also a positive experience. So since the money came in that last quarter, we're looking at a plus 4% return. So we're already seeing some movement on the portfolio. Now, as Gemma said, we would usually give a formal update. I know you've only been with us a short time, but given we met with you about a year ago, as Daisy said, I'm going to talk through the last 12 months and really talk through what the fund's done, what markets have done as well, just to give you an update. So here we're showing the key asset classes that we look at over the last 12 months, and you can really see kind of variations in different assets. So I'm going to start with the good things, which is that bright blue line at the top, which is global equity, so global stocks and shares. So although they're very volatile, you can see that actually over the last 12 months, the end of January, they really have been the thing that has generated the most return. One of the biggest challenges we've had in recent months is inflation, which is shown in pink, and cash is now in that grey line. And it's really good to see for the last 12 months, because we've had rising interest rates, that cash is now just about outpacing inflation. So any cash returns that clients are getting from us when we're giving yields of over 5% means they're actually getting a bit more than inflation. So kind of cash values are finally keeping touch. Now, when you've got higher interest rates and higher inflations, two key asset classes, their price starts to struggle, one of which is commercial property in green, and the other one is government bonds, as the yield you're getting from the old bonds just can't match where current interest rates are. So you can really see that they haven't performed well. But actually for us, when we see things, we see volatility in equity markets or we see dips in bond markets, this is actually a really good opportunity for us to actually go into these things and buy them. And we very much saw the end of 2023, what we call the everything rally. So both bonds and equities very much moving up, very similar kind of motions, kind of giving some really good end of 2023 returns. If we're thinking about the ethical fund itself, this is the fund that you're invested in. Its aim is really to protect from inflation over the long term. We know that in the shorter term, slightly harder to do so with the history we've had recently. But its total return in blue is the ethical fund in blue. This is capital growth plus income. So you can see the year's return has been very, very strong. But for our other kind of charities and other kind of faith groups who invest with us, those have been over 5 and 10 years, being these annualized numbers, those are like the average per year that they would have got. We show our performance against 3 key benchmarks, one being our direct competitors with the ARC Steady Growth Charity Index, our comparator benchmark, which is made up of lots of different indices because we invest in lots of different things, and that inflation plus target, which we have there, the CPI plus 5. And again, over the last year, we've had some really strong numbers. And over the longer term, for our other investors who invested for a longer term, you can see that there's been some reassuringly strong numbers against all of those benchmarks as well. Now, because we're showing this as an average, it's probably worth kind of remembering that not all kind of years are equal. It's not a simple pattern. And there may be some difficult years. Now, you'll be very pleased to know that you avoided, with us anyway, the returns in 2022. Evelyn Partners may have had an equally difficult time. But we really see that some years are good, some years are bad. But really how much inflation has really impacted in 2021 and 2022, when we've really seen the impact of that. But for those investors, as I said, who've been with us a long time, when we think about performance on a cumulative basis, you can see again the same cohort here, that actually the ethical fund in bright blue has really done very well, although inflation and the high levels have really started to catch up and very much outperform our peer group and our benchmark as well. So I just thought I'd show you that to give you some context of the longer term kind of performance of the fund, even though you've only been invested now for a couple of months. If we're thinking about the income, one of the big things for our investors, we try and grow the income. And I apologise, this is actually quite a boring chart. But what this shows is the dividend pence per unit. And so in 2023, we maintained the income, but this year we're increasing it. So when we met last year, we would have had suggested slightly less income than we would be getting. Yield is always just a snapshot in time. So for us, it's really this dividend pence per unit, which is the driver of income. So therefore, that £54,000 odd is going to be the most important figure to you, and one that we hope to grow in the future as well. So thinking about the ethical fund itself, how do we give you that performance? How do we give you that income? It's a multi-asset fund, so we use all the tools at our disposal to actually grow the assets. It's quite a large fund now at 2.2 billion in size, and we find that many faith groups and health charities really like this fund, because we do all of the asset allocation for you. You don't have to have a conversation about how much property, how many equities. It's all done within the fund structure. So equities are the major portion. This is in the grey bit of the donut chart. And these are the engine of growth. If we saw the earlier thing with that kind of the equities really doing well. But what we're also trying to do is mitigate risk and that volatility. So that final quarter, we hold the other assets. So we have things like infrastructure assets. This is things like alternative energy, so solar power, wind power. We also have infrastructure funds that build roads in India, hospitals in Italy. So very much kind of a global approach to the infrastructure holdings. Property tends to be more focused in the UK, as the primary holding here is our property fund, where we physically own the bricks and mortar, understand the tenants, but we also have some exposure to some other real estate investment funds, but very small ones there. Contractual and other income are just different types of investments where we get a different type of income. So whether it's through debt portfolios or music royalties, that's always been helpful. And private equity and other are some smaller kind of holdings within for a diversification. So we're talking about companies which may invest in unlisted holdings. Excuse me. One of the biggest changes we've made is fixed interest. So fixed interest is another word for bonds. And over the last year and a half, we've kind of gone from a 0% holding to the 8.61% you see here today. So although we show bonds under pressure, what we find is that actually when we can buy them at a lower price, they can actually add value in the longer term. And cash at 2.44%, very much there for liquidity purposes. Now, given that equities are such a major part of the portfolio, I thought it would be helpful to talk through the sectors that we're investing in and those that we don't. And actually, I'll start on the ones that we don't. So this chart here is showing the change in holdings in sectors, with the pink one being December 2022 and the blue one being December 23. The first two sectors we hold nothing in are energy, so we hold nothing in conventional oil and gas, and nothing in materials, so no minings as well. We also only have one utility holding, which is one in the US, which is NextEra Energy. And one of their focuses are on kind of looking at the new renewable energy and doing things like buying coal power stations to decommission them and repurpose them for the transition to a low carbon economy. Things we do like are things like IT. So some of the big IT names we have in there are things like Alphabet, NVIDIA, which is the darling of the IT sector at the moment. And if you don't know NVIDIA, they manufacture the tiny little semiconductor chips, which so many companies do. But primarily theirs is really important because it's behind ChatGPT. So really kind of the growth of AI. And at one point last year, their share price was up over 200%. That being said, our position relative to the market is actually quite small, but it's still a really good holding within the fund. We also added in Fortinet into the IT sector last year. So this is one of the US holding, well, a global name really, that is one of the leaders in cyber security and firewalls. Healthcare's come down a little bit. We tend to think of healthcare as a bit more defensive, but we're talking about names like Stryker, so thinking about joint replacements, Novo Nordisk, who has done very, very well with their weight loss and diabetes drugs, which you may well know something about. It's all in the press. And then we have the financials, which has been broadly the same, but names like MasterCard and Visa, who've really built the infrastructure behind contactless payments. The only bank we hold still is HDFC Bank in India, but we tend to prefer things like exchanges, like the London Stock Exchange as well. And just one little thing on the industrials, which we've added in 2 new positions, so looking a bit larger than it has been in the past. Just bear with me a quick second. So we've added in John Deere, and I have to say I knew nothing about farming, so it's been quite a new name for me. But not only are the tractors that everybody seems to know, but also they have the technological farming solutions as well. And then we added in Train Technologies, which is a leader in HVAC, so heating, ventilation and air conditioning. And they're one of the leaders in these solutions that also are reducing carbon emissions. So thinking about the transition again and avoiding carbon intensive businesses. So hopefully that gives you an idea of some of the companies we're investing in within the fund. And I think just quickly, just to touch on some of my comments earlier, we just showed you about the changing in sectors within equities. This just shows the change in the other asset classes that we look at that I intimated earlier. So, you can see the really big change to the right of this chart with cash at over 10% this time last year, now down at 2.4%, and that corresponding real increase in bonds. The reason why we sometimes hold high amounts of cash is very defensive, and we think the market's going to be a bit difficult, and therefore we think about the other asset classes as being more generation of growth. So that's why we've kind of made that change over the last 12 months. But the rest of it is all to do with just general trading and moving around and positioning of assets. So that's the investment fund. I thought it'd also be helpful just to reiterate the Act, Assess, Align framework, which is thinking about our good investment. So I'll start with Align, which is about the the exclusions on the fund. And so these are very much in line with our clients. We survey them every 3 to 4 years to say, are they broadly in line? And later in the presentation, when you have a chance to read through it, there's a full list up there, but really excluding tobacco, alcohol. We've got some weaponry exclusions and a lot of climate change. So we don't invest in oil and gas. It's really kind of hard-coded into this fund. We then have assessing the fundamentals. And really what we're talking about there is thinking about risk management. We don't want to invest in companies who are thinking about, who aren't thinking about the changing environment, who aren't thinking about social change, but most importantly for us as well as governance. We want companies who are well managed, who are thinking about the checks and balances within their own business. Finally, and this is quite a bold approach, but really driving change, so acting for change here. And here we're trying to change companies' behaviours, and we tend to do this at the moment between 3 key areas, one of which we've been doing for over a decade, which is thinking about climate action. So thinking about moving to net zero, thinking about moving away from coal, and really kind of working with the global network to actually change businesses' behaviours. One of the 2 newer areas are modern slavery and mental health. And really with workplace mental health, with the way we've had most impact is actually by benchmarking companies against each other. And, this is quite a bold thing. Who knew that they didn't like to be benchmarked against each other? What we found, having done this in the second iteration, is that companies are improving looking after their employees. Now, some trustees go, well, why is that important? Well, for every £1 invested in looking after employees, you get about £4.50 back in increased productivity. So we found that to be really, really helpful. 1 minute. And so having learnt from that, we've now done benchmarking companies on modern slavery disclosures as well. We've only just done our first one of these, and we tend to find that the first one is more kind of, where are you today? The next one will probably be the most important one. When we're thinking about modern slavery, thinking about finding it in supply chains, we know it's in so many supply chains around the world, but also working with the Home Office to actually kind of get the next Modern Slavery Act really to have more teeth. So we're working on that with Dame Sarah Thornton, really doing that as well. So all of this work is going on behind the scenes, at the same time as our investment team choosing the right assets to put into the portfolio. So just finally, thinking about what's going to happen. This is a slightly interesting slide because on the left-hand side, we've got what's the market thinking. But on the right-hand side, we've got, well, what do we think? And the way that the consensus is going is we're talking about slowing growth. China is slowing, everybody is slowing, but they're not expecting recession. And the US are expecting 4 policy interest rate cuts. But I think one of the biggest things we've got this year is over half the world's population will be voting. So we've got a lot of geopolitics, in conjunction, of course, with the Russia-Ukraine war continuing and the issues we're seeing in the Middle East as well. The US election is probably the one that can move the markets the most. And while the markets are currently saying that, very much thinking about a Trump presidential win would be good, our view is slightly different because we think although if inflation is still higher, he tends to have an inflationary approach because although he helps businesses, it doesn't mean that that's going to work. He also tends to put some of the tariffs for global. So we think about global growth, not just US. So we think that could have an issue. We're also thinking about the fact that it does kind of look like a US recession could be on the cards. So we're keeping a close eye on that. So while all of this is going on, we're looking for good businesses with strong balance sheets, little to no debt, and lots of strong free cash flow to make sure that the income is steady and we can look for long-term growth on your portfolio. So at that point, I'm going to stop sharing. Oh, there we go. And there we go. And questions.
Okay. Thank you very much, Antonia. That was excellent. And I think you did a really good analysis on the economy as well. I really like that. But it's open to questions now to members. Does anyone want to ask any questions? I haven't got anyone indicating yet. Okay. I'll ask a question anyway. Obviously, you talked about the economic growth factors. I think your analysis of Mr. Trump, I think, is correct. I think if he does become the next president of the United States, I think he will go for kind of like USA first position, which I think he did largely when he was president last time. And I think he will look to, by that position, I think he'd be very much into tariff reform. I think he'd probably put more import controls. And also, I also think that he'll try and do something difficult because I think you like to pursue a low interest rate regime, but I think the forces of economics will force them to raise interest rates because fundamentally you try and go against the market, and we saw that with Liz Truss last year. You know, it unpicks itself very rapidly. So, you know, I happen to think that. I just wonder, my question is really, what do you think the future of ethical investment? I mean, you talked about investing in IT companies like Alphabet. Alphabet, as you know, is the modern name for Google. I mean, most people know it as Google rather than Alphabet. But clearly, you know, Alphabet or Google has huge market share throughout the world. It is very much a very big company. And I'm just wondering, what's your appetite for investing in perhaps smaller enterprises or enterprises which are growing quite rapidly? I just wouldn't mind a little answer to that, Antonia.
Yeah, that's a really good question. We tend to focus, as I said at the end, on companies which have got strong balance sheets and lots of strong free cash flow, as they are able to grow more organically. It doesn't matter what the share price is, that's when they're able to grow. What you tend to find with smaller companies is they're very heavily debt, you know, they're growing. So they take on a lot of debt to grow and invest and invest. And so we don't always find that total return is coming through. That said, what we have done on some of the tech angles is to kind of invest in things like the Clean Growth Fund with the UK government. And that is really a fund that is investing in the next big thing. It's looking for these small things. So we're not putting our investors at risk directly, but we have participation in investing in smaller businesses through kind of holdings like that and through some of the private equity funds. But, you know, this is a fund for charities. So this is funds that is a medium risk fund. We're not putting lots of extra risk in the portfolio by investing in untested companies where we don't actually see, you know, where their drivers of growth are from. So it's balancing all of these things together. And if we're thinking about the ethical fund, and thinking about how we engage on all of those pillars, even in the larger companies, we do engage with them on all of these issues. And every company, you know, is kind of rated. Not every company is the best. You know, our view isn't that we should be investing in the ones that are doing it completely right today. Our view is about to invest in companies who we think we can help improve over time, because they need their shareholders to sometimes push them and hold them to account in various ways.
Thank you very much. I think that's a really, really good answer. I mean, I was thinking, obviously, lots of companies are highly rated, and yet they don't declare dividends. And especially in the American stock market, it always seems to be that way. And I think there always is a cause of concern, in my view, is because the highly rated companies can soon go the other way and some become less rated, because clearly, if you're not really generating any yield, you're not generating any dividends for the investor, then why would the investor continue to invest other than the promise of a rising share price? But if it's high, why would it continue to be high is my view. You know, I think you're right. We always got to be careful, considering we got around 2 million of funds, and they are kind of public funds for distribution. We cannot really employ some sort of high risk strategy, much as though sometimes it might be quite exciting, but really we don't want to go there. And I know the stance of the members, and very much my stance as well, is that we try and invest in ethical investment, given that we are a church fund. You know, it's not something we want to really invest, you know, in things like weapons of mass destruction or exploiting people in the developing world. We're not into that. You know, equally, we're not into investing in non-renewables either. We want to invest in renewable energy. So I think, you know, you understand our stance, and I know that many other of your organisations you work with also have the same stance. So can I thank you very much for your presentation? I haven't got anyone else indicating to speak on my system, so can I thank you very much? Gemma, do you want to make any concluding remarks?
Hi, Chair. No, I think it's I'm really pleased that we were able to get CCLA here today, and it's really encouraging to see how well the investments are going forward. I mean, it's nice to see that we're almost back at the position we were in terms of the capital value that we were in 21-22. So that's really positive. And I think in terms of the income projections, again, that's obviously in excess of the amount we have been getting and what we were kind of aspiring to achieve, I think. So all really positive.
Okay. And can I thank you both, Antonia and Daisy? You're more than happy you want to continue to be on this platform, but I know you're probably busy people, and I'm sure you've got other things to do. So can I thank you, all right, for turning up today virtually. All right, cheers.
Thank you very
All right.
much. Lovely to see you. Enjoy the rest of your meeting.
Thank you very much.
Thank you. Bye.
Thank you. Bye-bye. All right, now I'm going to move on to the next item on the agenda, which is
If I may,
applications.
Chair,
Yeah, sure,
sorry
yeah.
to interrupt. Can I just confirm, are the committee minded to note with thanks for the presentation as
Yes,
presented?
I am. Yeah, we're happy to do that. Anyone could? Yes, I got Charles
Councillor
Champion
Champion?
and Howard. Yeah, Councillor and Drake and Councillor Ham and Councillor Charles. In fact, I think virtually all of them.
Lovely. Thank you, Chair. I'll take it moved by yourself and seconded by Councillor Champion.
And thank you for the prompt, Amy. Much appreciated. All right, we now move on to agenda item 5, which is open to Gemma on application for financial assistance tranche 4.
Thank you very much, Chair. So this is our fourth tranche of applications for financial assistance in year. Both of the applications are recommended by the Vale Morgan Council, and they reflect the increased £10,000 threshold that we are trialling. So if I go straight to Appendix A first, just to detail the applications, and then we can discuss some of the surrounding financials. So the first application is for the Parish Church of St Nicholas, and that's the repair and refurbishment of the Lich Gate, and that's in response to the quinquennial, which is one of my favourite words, review. So it's quite an extensive repair project. So it's a Victorian Lich Gate, and the path also needs repair. So the total scheme cost is around 44,000, and the full £10,000 has been applied for, and there are some match funding that's being put forward by the church, including a public appeal. In terms of the second application, Croyster Park Baptist Church. Now, this is quite an interesting one because it's a grant application that's previously been awarded by committee, but the condition of the boundary wall has deteriorated, and the group that submitted the grant claim came back to talk to us, and were aware that the grant award sum had been increased. So they have withdrawn their previous grant bid, and are requesting now that higher £10,000. I do have some concerns in respect of the match funding of this scheme. I believe they do have some grants applications in, but there's also a proposal of some interest-free loans from the congregation to make up the sum. So it could be that we need to see more information before we're able to approve this grant award. So whether committee are minded to approve this one in principle. In terms of the wider financials, I think what I've done is I've reflected the fact that we're unlikely to have a fifth tranche of grants in 23-24. So I have reduced some of the estimates within the projections that are shown in Appendix C to this report. That being said, if income comes in over and above that sum, it will be transferred into reserves, and we will, of course, be able to utilise that. Committee will be able to utilise that as grant awards in 24-25. Those are the main points I was going to draw out, but I'm happy to take any questions on the report.
Open to any questions, first of all. Yeah, Councillor Champion, over to you.
Just what you're saying about the wall and knowing what goes on. Do we get sort of answers when these monies have been spent previous times as to, do we get evidence of what's happened so we know the work's been done?
Do you want to answer that, Gemma?
Yeah, sure. So there is a statement of completion that gets submitted by the body, and we have previously operated an approach of spot checking those awards. I mean, I think now that the sum that we're allocating is potentially increasing, I think we probably need to amend those approaches to ask for evidence in all cases now going forward. So that would be an excellent suggestion that I'd be happy to take forward. Yes.
And the other thing is, because it's a length of wall, whether the 10,000 would actually help them do some of the wall. I don't know whether they have to do the whole wall, and therefore the 10,000 wouldn't be spent until the whole thing's done. I don't know.
Yeah, so the total scheme is £132,000. So this would be a contribution towards. It may be that a patch of wall could be repaired. Certainly the indication from the bid is that the wall has collapsed. I suppose there's risk to the wider wall, and I suppose potentially more expense required to do it in stages. But we can certainly go back and clarify that if members would like me to.
Okay, fine. Councillor Hooper now.
Thank you, Chair. And I'm just in quite this same point tree that Councillor Champion's on. Am I right, Gemma, in thinking that we've got almost 62,000 that's being funded by members of their church and 4 members of their church? Because if that is the case, then I do think we need to go back and make sure that we've got access to that, because it's a significant part of it. And I just want a point of clarity, because it's got the £10,000 contingency. Our grant share isn't that contingency, is it? This is part of the 100 and whatever is £21,000. Thanks, Gemma.
Yeah, Chair, absolutely. Our grant wouldn't be part of the contingency, and we can certainly arrange for the payment to only be released on the provision of satisfactory evidence that the expenditure has been incurred.
Okay, thank you. Okay, can we now, because I've got no one else indicating who wants to speak, I'm going to divide this up into 2 parts, because obviously in terms of the financial assistance. So are we happy to sign off the St. Nicholas for £10,000? Is that a yes or a no? Yeah, Councillor Champion, are you happy to support that? And
Yeah.
Fine. And Councillor Charles,
whatever.
yeah, are you happy to support that as well, Councillor Charles? Is that a yes? I assume it's a yes, and I assume all the others are in agreement. That's fine. Now, the second item, that's why I divided it in parts. I think the other £10,000 for the Baptist Church, perhaps maybe we need further information. Once Gemma is satisfied with that information, are we happy to release that £10,000? I think Councillor Hamilton, Councillor Champion, Councillor Drake, I think you're happy with that. Is that okay, Gemma?
Yes, happy with that. Thank you, Chair.
Thank you. And we now go back to the other recommendations. Okay, we've approved those in Appendix A. Okay, and we set out, you mentioned about, because there'll be no transfer, the money being transferred over to obviously our general balance. Is that correct, Gemma?
Yes, Chair. So anything that comes in over and above in terms of income, and certainly I think some of our expenditure projections based on where we are a bit overstated as well, would absolutely be transferred into the unrestricted reserve and could be drawn down by committee as part of grant awards in 24-25.
Okay, are you happy for, that's my recommendation. Anyone supporting that recommendation? Yeah, Councillor Hamilton? Fine, so that's seconded, and Councillor Drake and Councillor Hooper. Fine, so that's the additional recommendation, Amy. Okay?
Okay, so just to clarify, Chair, if I may, so obviously you originally had a recommendation that to be resolved that the applications as per those in Appendix A be approved.
Yeah,
are you
the second one subject to more information, yeah, obviously.
Subject to more information just in relation to the second application.
Correct.
Is that correct? Okay,
Yes.
so you have a single recommendation subject to more information.
For the second
second
application, not for the first. The first is fine. The second, and also the third recommendation, which is one we created now, was really that any balance is transferred to the general reserves used as part of the investment and then be moved forward to 24-25.
The general reserves. Sorry, just making a note of that, Chair.
That's fine. That's fine.
Be sent to 24-25
That's correct.
balance. Okay.
Fine.
Thank you, Chair. I'll word that
really
appropriately for your approval.
sure. And I think that was supported by quite a few members. So I think Councillor Hamilton, Councillor Charles, Councillor Hooper, quite a few. So
Yeah.
happy. Okay. I just want to make
Thank
sure
you.
that's clarified. That's fine. We're now moving on to the next item on the agenda. Excuse me.
So if I may, Chair, just to confirm, this was an urgent item that was sent to members of the committee earlier today.
Yes, it was.
In relation to the audits of accounts. So if members could just confirm that they have received and had account of that, please.
Yeah, Councillor Champion, Councillor Drake, Councillor Hamilton, I think they've all received it. So
That's
over
lovely,
to you.
thank you.
Over to you, Gemma. Do you want to share your screen perhaps and do this, if possible?
I can do in terms of sharing the account. So the accounts are unchanged from the accounts that were brought back in November. I can just open them up now. So there is the independent examination has been completed by Audit Wales, and they are there's no issue as such with the figures. They're happy to sign the accounts off on the basis that they were presented in November. I have, as part of the urgent item, asked for a delegated authority to the chair in consultation with the head of finance, and that's purely because there is a potential presentation issue that whilst I have indication from the audit manager they're happy to proceed on the basis of it unchanged, they do need to get final sign-off within Audit Wales. And just to explain that to members, so the statements of the accounts are split between the unrestricted and the endowment fund, and then you have a third column which gives you the total fund. And it's my consideration that that's in accordance with the charity SORP. It's not consistent with some other Welsh Church Act accounts, though, across Wales. So in, for instance, RCT Welsh Church Act accounts, they just have a total column. So they don't detail then the split between unrestricted and the endowment fund. So it's my understanding from Audit Wales that they're comfortable that this is, our historic approach. It's not causing them any major concern, and it's something they potentially want to do some further work with us and potentially legal prior to the preparation of the 23-24 accounts. So in the next few weeks. So it's that presentational issue that is the reason that I'm looking for the delegation. So I'm not expecting to have to utilise it as part of the sign off the 22-23 accounts, but given that we've already beyond the Charity Commission deadline for lodging the accounts, I would be keen to get the accounts loaded, signed off by Audit Wales and loaded to the Charity Commission website as soon as possible. But we will certainly look to make sure that that issue is bottomed out as part of the 23-24 accounts that obviously we'll be preparing before too long. Is that clear, Chair?
Yeah, it's clear for me. I'm sure it's clear for the others. Councillor Champion, are you happy with that? Or do you want to speak, Councillor Champion?
No, just happy and sort of say or propose that that's okay.
Thank you very much. And Councillor Hooper?
Same, happy with that. Move on, done.
Thank you very much. Okay. Has anyone got any points on the finances at all? Councillor Drake?
No, I got no issues with that. I think it's looking good at the moment.
It's looking good. Excellent. Okay. I think we're happy to move that. Okay. Excellent. Okay. I don't think we got any other items on the agenda, haven't we, Amy? I think that's it.
No, Chair, that's correct. Nothing further under Part 1, and you have no items under Part 2 urgency.
Okay.
I just want to confirm that obviously the committee are minded to move the recommendations as presented in the report.
Okay.
Everybody seems content. I just want to check that for the recording.
Yeah, I think everyone is happy with that. Councillor Champion, are you seconding that? I take it you are as well.
Yeah.
Okay, and I got, thanks from Councillor Drake and Councillor Hooper as well. Can I thank you all for today and see you no doubt sometime in some other format. Okay, take care.
Thank you very much.
Have a good evening. Thank you very much. Thank you, Amy.
Thank you.
Take care.
Bye-bye.
Bye.
Bye, everybody.